Alright, in this final video, I'd like to bring everything together as far as integrating price action reading with your particular trading system, whichever trading system you may follow. Okay, it doesn't matter. Also, it doesn't matter whether you trade off the 1 hour time frame, of the 4 hours time frame, of the 5 minutes time frame. It doesn't matter. It's always useful to draw those levels of support and resistance, especially in the long-term charts. Okay, so what I'm gonna do in this specific video is to give you a few tips that perhaps you are already familiar with because I may have mentioned them before, okay, but I wanted to, simply bring the entire module into a conclusion, okay, like I say, by giving you a few tips as far as integrating price action analysis and your particular trading system. First of all, avoid trading against levels of support and resistance, especially long-term levels of support and resistance. You know what I always say, guys. Don't buy against resistance and don't sell against support. If you do that, you will be asking for troubles, all right? So it's best to stay out. It's best to simply avoid taking any buy trade, any buy opportunity whenever you find long-term resistance immediately above your entry point or support immediately below your entry point. Okay, so for example, let's imagine this is price merrily moving along, okay, and at that precise moment your trading system signals a short entry right there, okay, an entry to go short. However, you take a look into the, daily, weekly, monthly time frame, you draw your levels of support and resistance, and you realize that there is a trend coming right there, all right, and therefore obviously implying long-term support right there. The same would hold true if that was a horizontal level of support and resistance. Okay, let's make it a horizontal level of support and resistance just for the sake of discussion. Okay, so effectively you have support immediately below what would be your theoretical entry point, right, as per your system's rule. That's obviously a trade you don't want to take, right? It doesn't mean that you go against your system. It simply means that you are filtering your system's signals in order to make them, or to take only those signals that go in accordance, that agree with also the price action analysis you should have previously conducted. Okay, obviously the reason as of why you wouldn't want to take that trade is because even if you go short right there, chances are that price may go down, bang on this, just bang straight off on that long-term level of support and bounce off that level, and obviously moving against your best interest, right? So sure, price could easily break through, but why would you put yourself into that situation? Okay, you don't want to take a trade where the outcome of that trade is, basically gives you no better options than simply flipping a coin. Will it break through? And therefore, will I score some profits? Will it bounce back against me? And therefore, it will trigger my stop loss? Impossible to tell, right? So, if you see that you are about to take a trade against a level of support and resistance, it's best to simply let that trading opportunity go. Okay, and wait for another trading opportunity that may present at a better junction in the chart. Now, perhaps you may be wondering how far from that level of support and resistance how much breathing room you should have in here in order to take that trade. I can't answer that question. It depends on what type of trading system you trade. It depends on how many pips you expect to get from that trade. It depends on how close you are from that level. It depends on whether you are trading a scalping system, and therefore you are only shooting for 5 or 10 pips. Perhaps an intraday system where you more or less shoot for, let's say, 30, 40, 50 pips. Like I say, there are so many variables that I can't give you a specific pip distance from your system entry point to that level of support and resistance is something that you will have to gauge yourself. But at any rate, by just simply taking a quick look into that trade, into that chart, actually, you can easily gauge whether you have breathing room enough to score some profits before price actually reaches that specific level of support and resistance. Okay, my advice, if you see that that level is close enough, all right, or perhaps too close to score the average the average profit as per your trading system, my advice is to simply let that trading opportunity go. Okay. Next, avoid trading within congestion areas. You've probably heard me saying in previous videos and modules that you don't want to trade in what I call a no man's land. Alright, that basically is just a flamboyant way of saying that you don't want to trade whenever price is entrapped within two levels of support and resistance, having resistance above current market price and support obviously below current market price. Right now, it doesn't matter whether that's a range, right, a horizontal range, or whether a price is simply moving zigzagging within a triangular formation with a with a downward trend line above current market price and an upward trend line below current market price. Both scenarios basically imply the same thing: congestion and no man's land. Price is simply zigzagging, flapping sideways, within that congestion area. By the way, this principle is equally valid regardless of whether there is enough room from your. Let me actually redefine the range first. Okay, it's equally valid whether there is enough room from your theoretical entry point or between your theoretical entry point and the range boundaries. Okay, it doesn't really matter whether, I don't know, let's assume that there are 100 pips room from your what would be your entry point and, I don't know, either the resistance level above or the support level below, because this principle is not about, or not as much about, whether you are able to score some or to squeeze some profits out of this window here, but rather about the fact that that this specific market situation has no clear sentiment, no directional bias whatsoever, either to the upside or to the downside. When the market is flat-lined, okay guys, again, this is a universal principle that applies both to Forex, stocks, futures, it doesn't matter. When a market is flat-lined, it's very difficult to make profits. Just because, like I said before, there is no directional bias whatsoever, and therefore the market as a whole is in equilibrium. The market as a whole has not quite decided whether the next swing should be to the upside or to the downside, and therefore price swings within congestion areas are usually rather chaotic and very, very difficult to predict and very, very difficult to trade. Okay, it's like I said before, it's a matter of flipping a coin. When you are up here, let's say somewhere in the middle of a range, it's a matter of flipping a coin whether it will go to the upper boundary or to the lower boundary. Super difficult, all right, to predict, to react, or even to trade, right? So if there is no market bias whatsoever, right, in this market, how are you to position yourself either for a long trade or for a short trade? It's super difficult, extraordinarily difficult. It's basically a matter of luck. If the market as a whole has no bias whatsoever, how can you possibly have a bias yourself as a trader? You can't, right? So again, regardless of whether you have breathing room enough to score those profits, my advice is that whenever you see that price is simply moving within two long-term levels of resistance and support, my advice is that you simply avoid taking any trade signaled by your trading system. Just simply wait for better times to trade. Okay? Now, that pretty much falls in line with the next point. Try to take trades in areas that are free of any significant level of support and resistance. Okay? Or actually, let me rephrase that. I will say that try to take trades in areas where there is no level of support and resistance ahead of your entry point. So, if there is a level of support, if price is entrapped within two levels of support and resistance, as I was mentioning before, basically if price is entrapped within a range, this is the area, this is the section of the chart where you want to take your trades. Okay, so basically you want price to break free. You want to wait for price to break free from that congestion area, and down here, or up here and down here, is where you want to take your trades, not in here. There are two reasons for that. First of all, it's much easier to score a higher win-loss ratio in these sections of the chart than it is in here. And moreover, since once price moves or breaks free from this area, from this congestion area entrapped within these two levels of support and resistance, since there is no further level of resistance ahead of your entry point, or down here there is no further level of support ahead of your entry point, you will be able to stretch out your profit taking levels much farther out, and therefore you will be able to fish higher profits, okay, more pips per individual trade. Again, because you are not limited, okay, you are not limited by any resistance or support ahead of your entry point. Therefore, price will run farther in your direction, okay, and you will be able to squeeze more pips per trade. All right, so again, I repeat, always try to search for trades in areas in the chart where there is no level of support and resistance ahead of your entry point. Okay, your win-loss ratio will be better and your profit-taking levels will be larger. Anyway, let's imagine that you do have a level of support and resistance ahead of your entry point. Well, as we've already established, you don't want to trade against a level of support and resistance. So what are you to do? You are to wait for price to indeed reach that level of support and resistance, and then trade the market reaction. I repeat, if there is a level of support and resistance ahead of your entry point, wait, don't take that trade, simply wait for price to reach that level and then trade according to whatever market reaction you get off this level of support and resistance. Let me try to explain what I mean. So, let's say that price has been, I don't know, let's say that price has been uptrending, okay? And, well, your system signals a buy entry right there. But then you check, I don't know, the weekly time frame and you realize that there is quite a significant, quite a strong level of resistance just above your entry your entry level, or at least close enough to trigger the alarm bells, right? Well, an interesting position, an interesting solution to this problem would be to simply wait for price to swing all the way up to this level, bang, actually hit that level, and then simply trade the market reaction of that level. Obviously, there are two possible market reactions here. Either you get a bounce or you get a breakout. There is no other reaction possible, right? Either you get a bounce and therefore the level of resistance is respected, or in the other hand, the level of resistance is violated and price breaches through. So my advice would be, instead of taking this trade, simply wait for price to hit this level, wait for the market to hint the upcoming price swing, the next move, again, either a rejection or either a breakout, and then trade accordingly. Take the first trade your system signals in the direction of the reaction. If there is a breakout, search or wait until your system signals the first long entry. If you get a reaction, wait until your system signals the first short entry, right? You see what I mean? Wait for price to hit that level, see the market reaction, and according to that market reaction, then you take the first trade given to your system or given by your system in the direction of that market reaction. So I guess what I'm trying to say here, what I'm trying to get down to, is that as a general rule of the thumb, you want to let the long-term levels of support and resistance map the chart. Now that means that those levels of support and resistance should tell you when to trade, all right? When to trade, and at the same time also tell you in which direction to trade, right? Again, which direction to trade, and then let your particular trading system, as per your system's rule set, to dictate the how, meaning how to pull the trigger, how to enter the trade, where to position your stop loss, where to position your profit taking levels, when to trail your stop loss to break even, how many lots to trade, etc., etc., etc. All right? It really is as simple as that, guys. You see, the thing is that no trading system can be perfect, okay? Because at the end of the day, a trading system is nothing but a bunch of rules, right? It's nothing but a rule set that in theory should have a positive expectancy, a positive statistical expectancy, but your job as a trader is to aid, is to help your trading system by making sure that you only trade that trading system at the optimal areas in the chart, okay, and in the optimal direction. A trading system cannot know that in advance, all right? A trading system cannot possibly know when it's best to not take the trade or when it's best to simply stay out of the market, etc., etc. That's your job as a trader to determine when to give your system the green lights or not. You cannot possibly follow any trading system blindly, all right? So like I said before, a good trading system should have a positive statistical expectancy, but it requires your help in order to truly excel, in order to truly perform. And the best way you can help your trading system is by conducting that price action reading, that price action analysis, all right? Making sure that you know when not to trade and when to trade, and like I said before, also in which direction to trade.